Hey friends, Scott Smith with the Smith team at Keller Williams. Wanted to share with you what is going on in the real estate market. A quick recap of 2025, and then I'm also going to just split this into two separate videos, sharing with you what to expect, what the experts are predicting for 2026. So stay tuned and watch for the great video with some awesome information on the local real estate market. One of the biggest questions that we get asked is, how is the market? And we're looking backwards at what has happened and what the data numbers are showing us. We're also looking ahead at what to expect. So I wanted to share with you some information about that we've gotten from the local and national economists about what is happening in our real estate market. What we've personally experienced is that the market is moving again. I think there were a lot of people that were holding off in 23 and 2024, waiting to see what happens. And we're 2025, we saw a lot more families that were making a move within the real estate because they needed to, they were ready to, and they were tired of waiting. So that would be kind of the theme that we've experienced in 2025. As I share with you some of the slides, I just want to reiterate what is going on in the real estate market. After a prolonged slump, existing home market is showing signs of recovery. This is from the chief economist from First American Title, and they've actually a national company, and they've actually seen some good numbers across the country. Real estate is obviously a local trend, so what you see happening in Dallas is going to be very different than what you might see in the Twin Cities or on the East Coast or the West Coast. So real estate absolutely has a local impact, even different size of the Twin Cities, from the inner city, Minneapolis and Saint Paul, to the outer suburbs and more rural areas. Definitely makes a difference with that. The Twin Cities real estate, what we've seen with our local numbers, the median sale price is actually up 3%, up about $11,000 from last year, up to $391,500. We've seen some significant gains across the metro in all different price ranges, but modest gains, 3%, is pretty historical what we would expect. The average sale price was up 3.7%, up to $467. So obviously we know the difference between median and average sale price. We saw some nicer upper bracket sales this year that pulled some of those numbers up. So what that tells us is, looking at the average sale price, some of the top tier inventory is actually making a move. So that's good news. The days on market is actually flat from where we were last year. So from the time we list a property to the time we go under contract, 50 days. And a lot of buyers that are kind of coming into the market, they're expecting homes will be selling in less than a few days on the market. We're actually seeing a little bit longer market time. That number might actually be a little bit inflated due to new construction. Sometimes you'll see those new construction model homes that are sitting in the market for 6 months or more before the builder decides to turn them over to the next buyer. So that 50 days on market might actually be a little bit inflated, but not by much. We're probably still looking at anywhere from 4 to 5 weeks for a home being on the market overall. The months of inventory is actually a pretty surprising number. It's actually down to 2.4%, which has been holding there. Comparatively speaking, when you look at some of the national numbers, inventory is actually has risen considerably across the board. We're locally in the Twin Cities metro area, we're actually seeing inventory down quite a bit. Every year we see the peaks and the valleys with our seasonality. We'll see the market takes a nap between Thanksgiving and the Super Bowl. So we see a lot of homes that are actually coming off the market between November, December, and into January. It starts to ramp up January, February, March. So the lowest point of the year for our inventory is historically in December. And then we see that pick right back up again, and as it meets the spring market demand. The list to sale ratio is a number that we look at when it comes to pricing. Pricing can be a moving target. So with that, we look at where the market is going, and from a negotiating standpoint, this is a good number that we look at. So 97.4% of the asking price. That tells us that prices are a little bit high, and there's actually some great room for negotiating when it comes to going in, making an offer on a property. Those properties that are priced well and are in premium condition will sell above asking price. Just last week, my brother Todd had some buyers write an offer on a property. Unfortunately, they didn't get it, but there were 10 other offers on that property. So those are some key numbers that we look at on a regular basis when it comes to the local numbers. I want to share with you some of the national numbers when it comes to these same key points. It's hard to believe, but over the last 5 years, as we've come out of COVID, where we've seen some of these price gains, and you see Minnesota right in the middle of the map, that light blue in the 40% range, where we've seen some of those other markets that have gone up significantly with the green and the darker blue. Those numbers are actually starting to come back down to earth. If we look at some of the national numbers where markets are down, many parts of Florida, many parts of Texas are down year over year over 10%. So they're getting hit pretty hard. Where our stable and steady wins the race in Minnesota, we've got a pretty balanced economy compared to some of those other areas. So we've seen some modest gains, and we'll take those because we are good Minnesotans through and through. Existing supply of homes, and these are some national numbers. What I like about this slide that I got from one of our national economists is that he talked about 2021, how some of those supply numbers were artificially down back in 2021, and now we're back up to where we were in 2019 and even above in 2020. So it's definitely a healthier market nationally. We're seeing some of the corrections for those markets that ran up, and we're seeing the stabilization in the markets that didn't have the big run-ups as well. Housing homes for sale have increased. You can see this from May, June, July, all the way through October of 2025. The number of homes for sale has steadily increased. So from a buyer standpoint, it's a great opportunity. There's a lot more selection out there. From a seller standpoint, we've got to be more competitive and smart with our pricing as we're going to hitting the market. Price reductions. This is what I talked about, that list to sale ratio. This what basically tells you that 1 out of 5 homes that have been on the market have had a price reduction. This is national numbers through October, but it's held pretty steady across the board. So it tells us that looking at those list prices, there's definitely a little bit more flexibility when it comes to buyers making offers, especially when it comes to new construction. We've had some buyers get some great deals. Those national builders want to get that inventory off their books, and there's some great deals to be had out there. Homes are selling for more of a normal pace. This is nationally. Again, our numbers locally, our days on market was 50 days. Nationally, it's a little bit over 2 months. So not too far off, but definitely we're in a healthier market here locally in the Twin Cities, Minneapolis and Saint Paul. Some great opportunities for some of those home buyers that are looking to purchase. Last year, there were many first-time home buyers that were sitting on the sideline and paying rent because of the affordability with the interest rates. So we'll show you some mortgage rates, how they are definitely trending down. We're actually seeing the lowest mortgage rates today that we've seen in over 12 months. So we've seen some great drops and affordability when it comes to prices and mortgage rates. That's actually at a 3-year high. So we've seen some great trends in the right direction when it comes to affordability and mortgage rates, having a positive impact for people making a move. So yes, a 3-year high for the affordability is a good thing. People wonder, should we be buying a house? The young millennials that are coming into the market, buying their first home, should they pay rent or should they buy their first home? Well, if you look at the long-term viability when it comes to home ownership versus paying rent, there's no question that home ownership is definitely a great opportunity for them. Once their jobs are stabilized, they've kind of settled down into the adulting stage of their lives. Thanks again for following us online and watching our videos. If there's anything you need when it comes to real estate, certainly reach out to us, 651-777-3434. Thanks. Have a great day. Take care.